Hi, good week to all. This is Kelvin here again. Welcome to this week's latest edition of the weekly technical outlook on the major stock indices for the week of 25th of July to 29th of July 2022. So I'll be covering, as usual, I'll be covering the trend bias for this week as well as the key levels to watch on the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, and the German 40 index. So before we start, let's take a look at the disclaimer slides first. All right. So before we go into the technical analysis chart of the various major stock indices, let's take a quick look at the momentum analysis. That means the weekly performance across the globe for the major units, for the major stock indices, pardon me, globally, from US, Asia, as well as Europe, as represented by the German 40 DAX index. So over at US, over here is that all the major four indices ranging from the SPX, the Nasdaq 100, which is comprises heavily on the US big tech stocks, the Dow Jones Industrial Average, and the Russell 2000, which represent the growth small cap stocks. All of them actually rallied last week. And the most significant gain were the higher beta or growth oriented Nasdaq 100, which is up 3.4%, followed by the Russell 2000, which is also considered as a growth proxy index, given that they are small caps, which actually tend to be less matured company. So they actually went up by 3.6%. So that's actually a positive sign for our outlook. If you recall that last week we actually have a bullish bias on the major indices, the SPX 500 as well as the Nasdaq 100. So actually they actually moved in line with our expectation, which is good. And also bear in mind over here is that if I compare last week performance, which it's prior 4 week average, taking the difference, so it's coming like a rate of change that I plotted the momentum trend from this difference 7 period ago, including the latest difference number. You see that momentum trend has kind of starts to actually pick up as well. All right, it started to actually inch slightly higher. Then also one thing positive in the Hang Seng Index and the Hang Seng Tech Index, actually last week managed to actually record positive territory, back to positive territory, pardon me, positive 1.5% for the Hang Seng Index. And also one of the outperformer last week was the Hang Seng Tech Index, which comprises of China big tech stocks, up 3.5% after the prior week of dismal performance, where actually they underperform against the rest of the indices that we monitor. Primarily, one of the reasons due to this scare, this resurgence of this systematic scare in the China banking sector. Why? Because right now, there is actually a kind of a disruption in terms of home buyers that are actually refusing to pay their home mortgages. All right. So all in all, momentum trend also starts to pick up as well for the Hang Seng Index and the Hang Seng Tech Index. And the top performer last week was the Nikkei 225, which actually managed to stage a short-term bullish breakout from a short-term range, which we highlighted last week as well, plus 4.2% over here. Then the German 30 or the German 40 index also performed relatively well as well, a positive 3% after dismal prior weekly performance of negative 1.2% over here. And momentum trend has also started to improve positively as well for the DAX index. So now, before we go into the chart, let's take a quick look at the weekly performance last week of the 11 S&P sectors. So what we could see over here is that the top performer were actually more skewed towards the higher beta sectors like the consumer discretionary up close to 6.8%, materials up 4%, industrials and information technology up 4 and 3% respectively. So all in all, what we could see is a leadership by these higher beta sensitive sectors, which actually give credence to our this quarterly outlook view. So if you could actually recall last week, we actually published our quarterly outlook report. You can actually look it in our website. So we did mention that over here is that we are now kind of a potentially in progress of this between 1 to 3 months of corrective rebound phase in the major stock indices. But bear in mind over here is that there's still not enough elements to actually justify that we are the kickstart of a major process, a major bottoming process. That means, i.e., we still do not see a very strong chance for the index over here to actually see fresh all-time high, especially on the US stock indices. Okay, so without further ado, let's quickly go to the technical strategy that I'd like to share for this week. So as usual, before we go into the 4-hour chart, which I will use it as my time frame for my technical strategy for a weekly technical strategy 4 hour, let's take a bigger picture on the daily chart first. So as we see on the daily chart over here, the SPX 500 has managed to surpass the 50-day moving average, now acting as a support at this 39.15 level, 39.15 level, and the daily RSI also managed to shape a series of higher low, and it pierced past above the 50% neutrality level as well. All right, so we could see over here is that it's now being kind of supported by this ascending trend line support that I draw. All right, so confluence roughly at the 50% neutrality level. So all in all, what it means that over here is that from the medium term perspective, momentum has really starts to improve on the upside as well. So all this actually boils down to that 1 to 3 months of supportive, we call it elements to actually advocate for that 1 to 3 months of corrective rebound phase towards potentially 4217, 4310. Okay, so that's the wave B target, Mr. Elliott wave. And also, if you could quickly draw the FIBO retracement taken from the all-time high in January this year back down to the June low. You see it converging at the 50% retracement as well as the 200-day moving average. So this region here is pretty key. It's a kind of a make or break level. So if we start to see price action start to form a weekly bearish candlestick at this key resistance level, this is where the chance of another major bearish down move trend starts to kickstart, where potentially it could break below 35.80. But that's the challenge for coming when come close towards the end of Q3. Okay, this is where we got to be cautious about. Now, what's the strategy for this week? This week's strategy, so short-term strategy. So as you all know that last week we do have a potential price, we call it resistance at the 40.75 level. So price actually rallied as expected and almost hit the resistance target, which is a printed high of 4013. So what we could see over here is that it actually shaped a negative, we call it pullback or bearish reaction right at this minor descending channel resistance, linking from the high of 30th of March 2022. And also, if we draw the short-term upside movement right now, it's been oscillating in the short-term upside, short-term ascending or we call it uptrending channel, taken from the lows of 17th of June. And in terms of FIBO expansion or the fractal approach, we project it from the swing low of 17th of June all the way up to the 28th of June. Then thereafter, it did a consolidation, putting to the end of that consolidation in 14th of June. Over here, you see that one-time FIBO extension level conferencing at this region as well. This important, we call it a medium-term resistance zone level. So, and also if you look at the RSI has already started to shape we call a bearish reaction right below its overbought region. So indicating to us that this move up here from 14th of July all the way up to last Thursday high is a bit overstretched on the upside, where potentially we could start to see a pullback for this week. All right, a pullback, but I don't foresee it's a start of a major bearish, we call it a down move to actually take down the low of 17th of June 2022. So all in all, what we could see is that as long as 40.75 holds, right now we see a bit of overstretched upside momentum in the 4-hour chart, that means the short term. So for this week, as long as 40.75 holds, we may start to see a pullback or a retracement of this ongoing, we call it minor corrective rebound phase. So this minor corrective rebound phase has more or less been taken in 1 month already. If you take the low from 17th of June all the way up to 22nd of July, more or less about 3 to 4 weeks. So overall here, let me remove this as well. So we could see that this retracement actually takes shape at least 50% of this 3 to 4 weeks, 3 weeks plus of corrective rebound, which is considered the first wave A completed. Then now we're doing the wave B retracement, and we have the bracket wave C of that corrective rebound to complete this entire 1 to 3 months of corrective rebound phase. phase, pardon me, for the SPX 500. So we could see that 50% retracement is at 38.30, maximum 61.8% retracement will be at 37.80. So we flip to a bearish bias for this week, as long as there's no 4-hour close above 40.75. But however, if we see a 4-hour close above 40.75, then we'll see the continuation of this upmove sequence within this corrective rebound phase to take us higher to retest potentially the 30th of May and 3rd of June minor swing high area at 4,200 slash 4,217 on the SPX 500. So now moving on, next over here is we would like to see this Nasdaq 100 as well. So this Nasdaq 100 over here is that also came very close to our upside resistance level that we highlighted last week. And this one is pretty much more bullish. Why? Because it actually has really kind of surpassed much more in terms of magnitude, the difference above the 50-day moving average over here as versus the SPX 500, as you could see. So the 50-day moving average right now is acting as a support level, which is at 11,990, there about 11,990. So going for the 4-hour chart, so what I could see in the 4-hour chart over here is that previously we have 12,770 as my resistance level or target level that we expect this rally to actually move up to, which is more or less it's been met already. Because if you look at last Friday or last Friday, yeah, last Friday up move, the high is printed at 12,674. Okay, give or take is more or less hit. Then what we could see over here is that the RSI has started to hit and reacted off and exit off from its extreme overbought level, which is the 76%, and it has still some more room to go down before this key support level that is 32%, which is close to the oversold region. So all in all, what it means that the rally similar from 13th of June all the way up to last Friday to the 2nd of July is kind of overstretched. And what to see is that this is the first leg of that corrective rebound phase. It's more or less ended. And after this corrective rebound phase ended, it tends to actually do a retracement to retrace this 3-week plus of rally. So this retracement, okay, before I draw that retracement, is that we do the extension, the Fibo extension to tell you it's actually at one time. It's not a one-time extension, which is also the traditional, or we call it not the tradition, the norm of this corrective wave A. We call it a simple A equals C A target. All right. So now the retracement, how low potentially it could take us. So we could actually do a retracement to retrace this entire corrective wave A up move, 50%, 61.8%. And graphically, is also this congestion zone over here from 19th of July to 14th of July, and as well as this lower boundary of this short-term ascending channel that I draw from the lows of this 16th of June. So all in all, right, as long as 12,940 key medium-term pivotal resistance that we have for this week, potentially we could see this week this to kickstart this retracement move to retrace this first leg corrective wave bracket A corrective rally of this multi-week 1 to 3 weeks of corrective rebound phase that we do not think has ended yet. So this is a retracement phase of this first leg of this corrective rebound. Okay, so after this retracement has ended, it may complete that the second leg of that corrective rebound phase. All right, so over here, bear in mind always that like I mentioned earlier, it's a retracement phase, but we do not see it in terms of odds, but probability wise, there's no high probability that we will start to see a low that could actually take us below the low of 16th of June this year. All right. So, i.e., after this retracement is over, potentially there could be another second leg of corrective rebound or the Nasdaq 100 as well as the SPX 500, which actually implies also to the rest of the world, given that Nasdaq 100 and SPX 500 are the key big brothers or the major indices that actually drive this global equity price movement. All right. So now, next will be the okay. Then nevertheless, if we start to see a 4-hour close above 12,940, then that corrective, we call it the retracement or pullback scenario has been invalidated. Then we'll see this continuation of this corrective rebound towards this swing high area of 29th of April and 5th of May, I think, as a resistance at 13,500. Right. Now, moving on to the Hong Kong 50. So bear in mind the Hong Kong 50 last week, we have a 20,000 key medium-term pivotal support level as an access, but it got to break above 21,300 that we mentioned in our last week outlook, that in order to give extra impetus for this push up to retest its range resistance that is in place since 4th of April at 22,640. So if you look at since last week movement, it has been kind of a trading in a, what you call it, a pullback move, still in a pullback move, holding within this minor descending trend line, below this descending trend line that I draw from 28th of June 2022. So all in all, what we could see over here is definitely 2130. This resistance got to break up to give that extra impetus for that push up towards the range top resistance. So given that SPX and Nasdaq 100 faces the risk of a retracement, and they are given as the leaders, or others, we call it benchmark indices, tend to actually take a reference on significantly. So we rather turn neutral this week for the Hong Kong 50, 21,300, upper boundary, lower boundary 20,000. So I expect to actually oscillate within this sideways range, unless we start to see a 4-hour close above 21,300. uh, thereafter, we could actually start to see a push up towards 22,640 resistance level on the Hong Kong 50. But on the flip side, a 4-hour close below 20,000 potentially could see a further drop to actually retest the 12 May and this 12 6 May and 12 May swing low area at 19,165. Okay, so turning to a neutrality stance on the Hong Kong 50 for this week. Now, what's next for the other major indices that we monitor on the frequent basis will be the Nikkei 225 or the Japan 225. So over here, uh, this Japan 225 actually last week managed to shape a squeeze up above this minor range resistance around this 27,080 level, and right now it's almost coming very close to a significant swing high area, which is the range top resistance since 30th of March. Also getting was rejected on 9th of June at 28,400 level. And also, if you look at the daily dissertation, the daily RSI also coming very close to its overbought region as well. So if you go to the 4-hour strategy chart, last week we have a resistance level at 27,860 level. So all in all, right, what we're going to do over here is that potentially, right, it may now shape a retracement. So actually, it did a bearish reaction at 27,860, which is that resistance level target that we mentioned last week. So we don't want to put it so tight at 27,860. So for this week, we have the medium-term pivotal resistance at 28,400, which is this range top over here. So as long as this range top is not surpassed on the upside, that means there's no 4-hour close above 28,400, we may now start to see a retracement towards the lower limit of this range configuration that is in place since March, which is about give or take about 3 months plus, towards 27,300. Then thereafter by followed by 26,800 level support level. All right. So all in all, if we start to see a 4-hour close above 28,400, then we will see a further continuation of this rebound to actually retest the test the next resistance level at 29,380. So what's 29,380? Is this swing high area over here from 4th of June to 4th of January to 5th of January this year. And bear in mind, if you look at the short-term RSI, the short-term RSI also kind of shape a kind of a bearish reaction below this 79% extreme overbought level as well, and still showing a kind of up further downside to actually test this oversold region. All right, so all in all, short-term elements actually advocate a potential retracement towards the lower limit of this sideways range below 28,400 for the Nikkei 225 or the Japan 225 for this week. So turning to a bearish stance to actually see this potential risk of a pullback and retracement on the Nikkei 225 or the Japan 225 for this week. Then what's next for the German 40? So the German 40 index last week it hit our 13,400 resistance target level, which is also very close to the 50-day moving average. Over here, this blue line, I think as a resistance roughly at 13,500, people take us close. So right now, if you look at the RSI also kind of did a bearish reaction of a a corresponding key resistance zone, which is at 56% and 63% level. And also given that if you look at the 4-hour RSI, so the 4-hour RSI has indeed shaped this bearish reaction of this 75% extreme overbought level and still showing further downside potential to actually there's still some more room to go before hitting its oversold region. So all in all, what we could see over here is that given that and last week it really hit 13,400. So and we could see over here is that there's a bunch of graphical previous resistance now turns into a pullback support at 12,900. So we expect a kind of a sideways movement for now, at least in the short term for this week, between 13,450 and 12,900, given the short term RSI doesn't show any signs of showing more signs of a pullback rather than a continuation of this rally that was seen from the low of 14th of July, I mean start of last week. So turning neutral for this week for the German 40 index between 13,450 and 12,900. So unless we see a 4-hour close above 13,450, then we could actually validate a further up move to, in the first step, to actually hit this intermediate resistance level at 13,680 slash 900, which is this previous congestion zone here. Previous congestion zone support turns into a resistance. All right. Then, however, a 4-hour close below 12,900 could take us down potentially lower to retest that major support level at 12,430 slash 12,385, which is exactly at this swing low area that was held at least 3 times from 7th of March, 4th of July, and most recently on 14th of July. All right. So 3 times it tested already. So this level is pretty key to actually maintain that this ongoing 1 to 3 months of corrective rebound phase in the German 40 index. So to sum up everything, this week we start to see in the short term a bit of extreme overbought readings in the rally that was seen on the US major stock indices. So we do expect a pullback or retracement of these 3 weeks plus of uptrend or 3 weeks plus of corrective rebound that was seen on the SPX and the Nasdaq 100. But in terms of elements why we don't see a high chance to actually kickstart this bearish impulsive down move, that means i.e. to take down the low of June this year. And we're turning neutral on the Hong Kong 50 as well as the German 40 index. And we will actually flip into a bearish bias for the Nikkei 225 or the Japan 225 to play a retracement back down towards the lower limit of this its 3 months plus of sideways range that is still in place. So with that, have a great week ahead, and I see you again in my next video.